Welcome to the Festival of Entrepreneurs, recorded live at the NEC in Birmingham. Over the next few minutes, you'll hear from some of the most incredible founders, investors, and business leaders who joined us this year.
Good afternoon, and thanks for joining us this afternoon. The session now we're about to start is about getting funding, practical strategies for female founders. There's a few men here as well, so we'll try not to make it too basic on females. But there's no question there's been a gap in funding for the female entrepreneurs over the years. In 2023, just under 10% of European venture capital went to female-founded businesses, co-founded businesses. In 2024, that went up to 12%. So those are in free one. That's great news. But there's still a big gap, and there's still a long way to go, which is a great opportunity, which is why we're going to be talking to our two experts here this afternoon about how we can safeguard that opportunity. So, first of all, we've got Andrea Reynolds, who I have worked with for many years. Andrea is the founder and the CEO of Swoop. Andrea has not only successfully raised finance and continued to do so for her own business, but has helped thousands of people over the years to raise funding as well. And we have Patrycja here, who is the founder and managing director of Sclr Labs, and they are a growth partner for scaling ventures, and they help businesses increase their revenue, reduce risk, and refine their investment case and investors. So, extensive expertise here. Right, let's get started. Okay, we'll start with you, Andrea, if you don't mind. So, from your own fundraising journey, what was the single hardest part of getting investors to back you?
Great. Well, good afternoon, everyone. I guess just to give context, so Swoop, the company I founded, is basically around helping businesses get matched to funding, every form of funding. Just by building a profile and connecting their data once. And so for me, I've been doing this for forever, since I qualified as a chartered accountant, and then I was with corporate finance with KPMG, set up my own corporate finance firm. And so for decades now, I've been helping businesses get investment, get their tax credits, etc. So starting out on our investment journey, it was like, I kind of knew where to go, when to go, etc. And I just think the most important thing when we were starting out was I already knew what investors expected the moment I walked into a room, and that was I had to show that a product market fit for us was showing that our business model could generate revenue and showing that businesses wanted what we were offering. And so I would say before you even start out on your investment journey, really focus on proving to yourself that you have a business and a business model that customers want. Because you can have the best idea in the world, and you could go out to investors and you may or may not convince them. But for yourself, investment is only fuel to get you to the next milestone. It's not a be-all and end-all of itself. So you only want investment if you know that your business is going to be viable and customers actually want it. So our investment journey, I think if anyone was up in the previous session, I always say it's never pretty. It's always you're pulling funds from different pockets. And for us, we got government backing funding from Ireland, and then we matched that with Seed Enterprise Investment Scheme, Angels in the UK, and then we went on to raise further on EIS and VC funding. But for me, it was more important to know that we had a business that could generate revenue that customers wanted before I even started the investment discussion.
Yeah, thanks, Andrea. I remember it well. And Patrycja, from your work with founders at Sclr Labs, what are the most common stumbling blocks you're seeing that prevent founders, in particular the female founders, from securing funding?
Well, Good afternoon, everyone, as well. Great to hear also the story of Swoop Funding. I think I will kind of connect the couple of things here also to your experience. I think the main thing that I see at Sclr Labs with both the finds and the residents is that great ideas are often trapped in directing. And it's also more often with women than men, where the work has been done, and there is no traction, there was a lack of translation. So the translation isn't got back. To talk about the moment, share the moment, very often women wait to be that perfect moment when it seems perfect to me, when I see very often pitch decks from men or men approaching quality, and they are halfway there. I know they're always two sides, and they're great startups that find men with lots of details, of course. But looking at many women, we are often shy to recognize already validated, they wait too long. And very often they start demonstration with investors might be too long when they should. I think another thing with the female and difficulty with pricing is the surplus of voltage actions. Many groups may feel more intimidating, or many investors, when you look at the website, got men try to make men and key success of previous Sclr growth stories. If they're really growth stories of women going into the world of pushing, this is good at holidays, this is ready to invest for investors, then it's fine to reheat that. So I think those are two key things.
I would agree with that. I just think innately we're more conservative. But so when females are, I'm not generalizing, but kind of am. So when we do a financial model and we're like, oh, here's what our growth projections are going to look like, we're literally in our heads going, no, I need to know I can name all of my customers almost. Like before I will admit to, I believe I can make that sale, we're almost going, well, who is buying that? Guys just have this great thing of going, and I'm going to get to 1 billion, and then they're like, yay, I'm going to get to 1 billion. And I've had this experience myself where I have a male co-founder, and it's great. Actually, just even if it's your partner, your husband, whatever, just even getting them to be them and do a set of numbers for your business. But we were in New York, and this was like just a couple of years ago, 2021. 22, when there was loads of money out there and valuations were ridiculous, and I'm sitting there in front of these two kids two males, and they're like, could you not be spending more to grow, and you're lacking ambition. I was like, no, I'm just really, I want to build a forever business. I don't want to be beholden to the markets, etc. I'm trying to build this business. They were like, I think you just maybe being a bit too female about it, and you're a bit too conservative. But hilariously, fast forward, interest rates go up, money isn't so prevalent anymore, valuations are going down, and I go into the same meetings, and now they don't look to my co-founder anymore, they're looking to me, and they go, you're really capital efficient, we love you. And it's like, I do think it's our time, because they are looking for businesses who think about profitability now, and we as females are naturally more like thinking about that. So I do think it's quite a good time for us now, because I do think VCs, that growth at all costs mindset is a little bit more tempered. I don't know what you think about it.
Yes, absolutely. I have few examples of residents in the hub. Right now we have two female, a female-led startup, actually 3 female co-founders. Those ladies are really fertile. They network a lot as well, but they also, when they are at their desk, they really work on every meeting. They really do their artwork and homework whereas I had also made founders, and they're always somewhere. And very often it's like, I'm gonna pop into Virginia first. You know, they all be qualified, they all fundable there or close to being fundable. But the model is different, the mindset is different, and those ladies shout less lyrics. They are more quiet. They're just doing the quiet work. Whereas a male founder usually is very vocal about each every step, but it might look attractive and investable to someone at first glance. But then you look with the magnifying glass, the pitch deck is just the first step. And then you actually figure out like, oh, those two ladies, they actually know what they're doing. It might be what was, that Swoop readiness when you met your investor.
Yeah, you've literally just described the two founders of Swoop, one male walking and the absolutely. So, there's some of the barriers. Let's now move on to how we look at hot founders, build that credibility and track, I think, where it becomes up over and help them overcome that. So, Andrea, let's start with you. When you get Swoop, what specific metrics, milestones, or framing helped you build conviction?
Yeah, I think what I pitch in terms of my metrics are very different to what everyone else should be pitching for their business. So we start life as a marketplace, so I'm looking at things like revenue growth rates, I'm looking at the cost of acquiring a customer and the lifetime value of that customer, I'm looking at proving that customers are coming back, repeatability, etc. So like a tip for everyone, I would say, given now that we're in the world of ChatGPT, is put in what your industry and sector is and say, what are the metrics that I should be using to know that I am investable as a business? And actually they're metrics you should then use for your business moving forward. And the other one is, like, if you're going to see a VC or, an early stage fund, again, put that into GPT and say, what have they invested in? They will have written blogs themselves on metrics that they like to follow. But there's one universal one that we should all be following, and it's going to be the question, and it's your burn rate. So how much cash are you burning through at the end of every month? Your net burn, so your revenue comes in, great, your costs go out. What are you burning through? Because why that's universal is they need to know, are you asking for the right level of investment? Are you aware of what your burn is? Are you controlling it? And will you have enough cash to get to the next milestone when you'll be taking in your next round of investment? So I'd say that's one universal one, but each to their own in terms of metrics they need to be following.
Jux, have you seen any sort of obvious blind spots?
Yes, I do see many. I mean, first of all, we focus on the founders that are past survival mode, or they built, I wouldn't like to say they built the business, they have the basis, built business, and they should have earned traction, or they already built that traction. What I see, the blind spot, is just to prove that they have it, to show that in the good way. I think very often you flip through the pitch decks and you see the milestones slide. You see what they've done, and sometimes I see something like 1,000 space followers. Like, that's not traction. So it's very often what they show is the static kind of milestones, I would say, rather than the dynamic growth, showing that I understand as a founder the mechanics of like what builds the momentum to scale in the business. Because if you're aiming to approach investors or VCs, you should they want to see that you're stable, that then you've got that. So rather than showing something static, looking at, okay, so we've got 40% growth towards that, and by that year, next year, going to be that kind of number. So I think really looking into what creates the momentum, what is the model, what are the mechanics behind it, rather than showing like these are the numbers and yeah, it shows that we are growing. Of understanding what drives the business, what's that secret moment of I didn't word, or what would that trigger moment work, and what kind can I replicate later on to create tomorrow that's and I think that's very often. I mean, I recently also to pitch that's where and spoke to callers where in my breath they said, well, we need 500k this we're expanding into this country in one breath. And you ask the question about what's the traction, what is there, and then there was a reiteration of what they already said. It really of the understanding what the investor wants to see and how am I going to stake. You don't accept that as a partner. That I shouldn't have a conversation.
Okay, so they've proven they're credible businesses, now they need introduction. So, Andrea, how did you grow your investor network, especially if you don't have those warm introductions in the first place?
I think one of the first, just going to events where you know that there's going to be investors, and again, doing your homework on, it's not a huge playing field. If you were to say, oh, I need to go find an investor, you could say, well, where do I start? I go on LinkedIn and I find anyone that has investment fund or investor. But actually, you can whittle it down to investors who are interested in your life cycle, like where you're at in your cycle, or your sector. And so I think events is you have to. You can do LinkedIn, join your groups, join like things like Sclr Labs, or anything where there's an accelerator program. Might be run by your local growth hub, might be run by your bank, might be a webinar event that you go to. So it is back to the basics of that, and then the other is just connecting with them all on LinkedIn, and then maybe they might see one of your posts, etc. So you're starting to build your credibility that way. That for me, it's just hard groundwork you need to put in, or then joining platforms like us, or looking at Sclr Labs and seeing is there anything there where maybe your first step isn't direct to an investor immediately, cold email or whatever it is. I think you just have to start creating your own network and circles, especially for female founders. There are so many programs out there now for female founders and so much support. That I think it's actually a really good time to be female. Like genuinely, I would say I've had advantages of being a female founder in today's world, getting access to VCs that I would never have had access to, and being asked to join programs because I'm a female. So I would say the stats may look bad, but that's because we're in a moment of change. But I have male friends who started businesses, and they're like, will you join my board? And I'm like, why? And they're like, we need a bit of female gender on our founder team, because we can then open up the number of funds we can go to, etc. So don't feel down about it. It's a really good time, I'd say.
I would say that too. And Patrycja, from your perspective, how can accelerators and that help with these introductions?
Yeah, definitely they can, and I will just go back to what you said about that being a very good time. There are lots of programs, lots of accelerators. When I first started my very first business, I was 17. That was like rethinking 13 years ago. There was nothing, and some women still do. It's even very young ones. I think right now, if you really want, there is a lot. What I would say the magic word for me is not network, it's a strategic network. That's one thing. As to tap into those programs, accelerators, find good managers, because if you're really conscious how you're going to build your network, being on a LinkedIn, being in places like this, and not being afraid to go and have a conversation, even if you feel like, oh, I'm not ready yet. Start a conversation, because it never happens on the day you want it. Always happens on the day 10 or maybe 3, or maybe in a year's time, I sometimes thought opportunities for people after I met them, nothing happened, and then suddenly you meet them accidentally somewhere after a while, and suddenly something comes. You have to be in the right room, you have to be ready. So I say strategic network building is working on yourself, being conscious where you need to be, being in the right room, and obviously the timing is important. In one of my previous businesses, I think the biggest deal that really turns or moved the needle for business, I had to scale within 2 weeks and build something, a solution for like really, really big program that was being ready and being very present in conversations with some of the partners, where at the moment happened, something landed on their desk and they decided not to go for it. Was a national, actually international contract for national delivery. It landed on a 23-year-old in front of my nose, and just with the words like, I think you should like that, you should bid. And I did. I don't think I thought I was ready. I just was silly enough to think, well, I could do it. But it's not that it happened by luck. Someone would say, oh, she got into the room and there was the envelope. I was really hardworking, and I was really working on that relationship. And I think being in accelerators, the program, being conscious of why I'm there and what I need from there. Sometimes an accelerator is not necessarily the sessions that they deliver, but who you need at that session. Going to an event like that, you might not need to speak to every single person, but maybe there are 2 companies where you just want to come and then you can leave the room.
Right. Yeah, and another thing I did when I started was I did a piece of research for the government and I delivered it. There was a guy in the room, he was part of the government program, and I knew he was an angel investor, and I knew he'd be really good to be on my team page and my investor day. And so I didn't ask him for money, I didn't ask him for anything. I actually just said, oh, do you want to grab a coffee? Because I really feel you could give me a bit of advice. I'm just starting out or whatever. And we built our relationship on that, grabbing a coffee, getting advice. I didn't ask him for investment for, I'd say, 9 months. And by then he was like, can I invest? Because we built up a relationship. So sometimes you can reach out to people who might have been previously successful in something. It might be your neighbour, it might be someone down the pub, it might be someone you've specifically looked up on LinkedIn. And don't start the conversation with, would you invest in my business? You started with, I'd love to grab a coffee at any time, would you be up for that? Now, anyone who's a previous entrepreneur, all we ever think about is how can we help the next, like it's just such an emotional connection. It's very hard for them to say no to that. And then they get to know you and then they'll give you advice. And even the advice is invaluable. So that's another way to approach it as well, if you don't meet someone at an event.
I just add one thing. Spoke to one of the interns on my team yesterday. He went with me for working events organized by people that I know very well. And when I went into the room, he was, oh, hi, Patrycja. So he was like, okay. So it was like a, meeting friends, not really business. I was like, well, no, it was exactly why I went there. I haven't seen some of those for a few months, and I didn't go there to do business or anything. I went there to show my face, to build a rapport, to maintain the momentum, so they know I'm present, I care. They had an event, and I think that's exactly being very, not being transactional in every situation will get you a transaction when you need it at some point.
Yeah, thank you. All right, so you've built your credibility, if you've built your network, you've still got rejected. It's inevitable, it's going to happen. What are the alternative funding options available for founders?
Well, I would say, first of all, being rejected is just par for the course. And you can talk to the biggest tech companies we all know today, and they all got rejected. hundreds of times. So it is for every 1,000, one will get funded. So going for investment is just part of your funding strategy. It's not the everything. And sometimes getting the no can do you a favor. So I just always say it's not pretty. It's quite an ugly journey funding your business, particularly during the survival stage. So you're doing things like your startup loan, and each of the founders can get a startup loan. That's how Swoop started. That's how we built our prototype. We entered grant competitions. We got our R&D tax credits. We took out a small loan for our cash flow. You're going to friends and family, and your friends and family might want to put a loan in. They might want to put an angel investment in. So it's just it's never ending, and you have to give some part of your week, or someone within your business has to spend some part of their week always looking at your cash runway, and making decisions based on you're getting to your next milestone before you're looking. So, and then who you're speaking to as an investor, when you're speaking to them, is absolutely key. And I think earlier we were talking about, we had somebody on Swoop who went to VCs too early, and couldn't understand it. Their business is fantastic. They're now doing millions and millions in turnover, and now VCs are coming to them. But what they needed was cash flow. And so we were able to fund their growth through giving them a facility, pay for their marketing, pay for what they needed to make the sales, to make the return, to keep growing. So it's just one of the parts of how you're going to fund your business. It's not the only part. And if you're getting no's, I would say you're probably getting a favor. You're getting a no. Never just accept a no. If you can say, is there any feedback you could give me? You might get feedback there and then, but using that feedback, like, honestly, don't say they don't really know what they're talking about, because we have taken it in and we've gone, these people know what they're talking about. We should just start running our business in with these metrics in mind, with these thoughts in mind. It just actually given me a lesson on how to view my business. So get something out of every no. Don't take it personally. It's part of the game, and it might be the best thing that ever happened to you, because now Fiona and I look back at some no's we got and we go, thank the Lord God we did not take them in as an investor. They were the wrong investor for our business. So it's not, think of it as a marriage. It's not always the be all and end all to have an investor. So yeah, I would just say it's part of your capital, but not only part.
Yeah, thanks. And Patrycja, from your perspective, when do you advise founders to stop chasing VC every day?
We help them to get ready for that, but yes, I'll also say every day that sometimes your investors, your customer, and you can fight them. And I have two stories, actually even more, but I'll give two stories in a minute. But I think very often founders think, oh, I'm fundraising and it's a badge of honor. It's almost like a FOMO, especially at earlier stages when I see another founder fundraising, like, oh, we fundraising, and then it almost creates something like, oh, we should too, without sometimes looking that there are other ways for the business. Bootstrap businesses, you can sometimes generate revenue, focus on where is the investor, and how can I get the 500k or whatever the amount is. You're not focusing on how can I actually make the business sustainable, maybe they're back. And it's not up way, because it depends on the sector, depends on maybe investors in tech. You've got big tech businesses where they need the funding, they need to find a way, and there are early grants, there's a VC way, there are angels, there are loans. But sometimes there is this fixation of, if I'm going after VCs, I'm somehow a better founder. It's not a road for everyone. If you're really building a business that is going to scale X times, yes, maybe, but not every business needs that if there is tech elements. So two stories. So I had within our network, we have a founder, female founder, who is somewhere around Series A, and they really struggle to raise Series A, even though the business is really interesting. They do something digital, AI, like media, multimedia. So you would think a successful business generating revenue and shouldn't have problems. And at first, from female founder, really like attention to detail and everything there. And she struggled through it. And there is this gap between that Series A, you might agree that there's obviously that becomes very steep. And she looked at her business and thought, okay, so the runway is very short. I can close it down. I can chase and like sweat, or I can. And they already had some traction, but I think there was a wrong customer. Cheap clients, delayed payments. So the advice there was, do a bit of a review of that. Maybe there was another way. She had nothing to lose, and she just put everything on like, okay, so we're going to fire all the clients that were probably not fit for us, remodeled the business slightly, and approached the clients that she had dreamt of. We're talking the Regent Street by the, big brands. They don't need the Series A anymore. They're fully sustainable. The business is really well and operating. And sometimes this is just simple as that. I spoke to another founder yesterday, early stage pre-seed, was trying to chase angels. And we caught up after 2 months. I said, how's it going? Have you had some traction? Do you have your term sheets? And said that no, it was really hard. But instead of chasing, because it's a full-time job, we started really focusing on generating growth and reaching out a lot of outbound. And we are making money, we are selling, we are shipping to, I think they are now shipping to Miami. They do some earpieces like jewelry. And they found a way. And he says, probably until we start developing the tech, we won't be going the VC road. Lots of founders think VC road is like, oh, I will get the funding and my life is easy and it's going to be really smooth. Is it? No. It's where the school begins. And, it's like you want to have that a brief, maybe for a day, and then the hard work begins.
Yeah. Okay, we've literally got 2 minutes. Just wanted to open up. Are there any questions at all from the audience here before we wrap up? One of your colleagues earlier, Kieran, mentioned Innovate UK. Can you just expand a little bit on what that is?
Yes. So Innovate UK is the government innovation agency. It's nationwide. And traditionally, Innovate UK would announce a grant scheme, and it would be open, let's say today, closing in 3 months' time. And it would say, you must be in this sector and you must be looking at AI or something like that. And then you would submit an application for a grant for that. And you'd have to literally say, and I'm going to spend the money on building this type of project. So it's very, very specific, very, very detailed. And so it wasn't really for businesses who are just growth businesses, can generally say, with this injection of funds, this is where the business is going, etc. Over the last couple of years, the government kind of switched it up. You can still get Innovate grants, but you can also get now Innovate UK loans. And the loan scheme at the moment, there's a call, it's open at the moment for applications. And they've increased the amount of funding available, and they've widened out the eligibility to apply. So now they're actually just looking for businesses who are seeking high growth. And it's the cheapest loan you're ever going to get in the market. It's 3.7%. Now, it's not easy to get. The way that I phrase it is, think about going for a bank loan and then add on top of that, like it's semi, I'm applying for a grant because you're getting a subsidized loan. But the reason we're letting everyone know about it is it's the first time where they really widened it out, and also because there's a lot more funding available than there usually is. So it's definitely one to look at, depending on where your businesses go. Yeah.
Awesome, thank you. Right, that's it. We're out of time. Do you want to have a final sentence? What's your final word of advice to founders out there? Andrea first.
I think it's just be confident that there is funding out there. Be confident in your presentation of your business because you do, I'm sure, know your numbers. And lastly, don't have it as the be all and end all. Run your business as if it's not coming. Run your business as if you don't care whether you get the funding or not, because actually showing up and not really caring, you give off vibes where they're like, oh, okay. And always go for it when you're not about to run out of cash, because they can feel that, they can see it in your numbers. So yeah, I would just say, I'm always switched on to funding options for Swoop, like always. It's just part of my psyche, and I'm always looking at their numbers. And I would say one of my female founder inspirations is a woman called Rosaline Blair. Her business is turning over around 800 million now. And Rosaline says, the first thing she says every morning is, how's the cash? Because she built her business through cash generation. She did not take VC. She started her business 40 years ago. She didn't have VCs, etc. She said she still wakes up every day, goes in and says, how's the cash? So I would say, if she's saying it, we should all be saying it.
So thank you. That was more than one sentence. Patrycja, you and
I'll try one sentence. I think don't try to prove, maybe don't approach it the way that I need funding to prove that what I'm doing is working. You will get the funding to help you scale what's already working. And the other thing to reiterate what Andrea said is like, think like a strategist, be like a CFO. So that morning kind of discipline of like, yes, is there what's going on the funding side or on the finance side, and here on the PR agents, build the right narrative. Also, that's all really.
great advice. Thank you so much. Thank you all for coming.
Thanks for watching this special episode from the Festival of Entrepreneurs. Our mission is simple: to help founders and business owners grow faster, think bigger, and take action. And if you were part of the event, thank you for joining us and being part of the community. And if you missed it, don't worry. We'll be back with even more ideas, inspiration, and opportunities to help you take your business to the next level. You can find out more and register for future events at festivalofentrepreneurs.co.uk.